Alan, for joining this podcast. So we started a podcast as Okkular called Let's Talk, and this is our episode number one. And for those of you listening, my name is Abhi. I'm the co-founder and CEO of Okkular.io. We are an automation company, and along with me, I have Vidushi Kala, who's our senior marketing manager. And today it's fantastic to have Alan Aaron join us. Alan and I have sort of known each other for a number of years now. Alan, before we dive into some of the questions, I thought for the people who are joining in, I should give a quick intro about yourself and just correct me if I get this wrong or if I miss out some of the key parts in there. So from what I understand, you are an aerospace engineer. You're also an electrical engineer. You then did an MBA. Then you started working with McKinsey and Company. Then you did a stint with EY in their technology consulting space. Then you moved to the VC space and started Technology Venture Partners in, it was 94, and there was a $200 million fund. Did that, then was a founder of startups or a number of startups for a bit. Then recently moved out of the Accelerating Commercialization program, which was almost a $500 million program by the federal government to invest in startups, and Okkular was lucky enough to be part of that program. So number of different things. Did I miss any key parts out there?
No, that was pretty. I guess the only interesting thing is I actually went back to uni to do my master's in electrical engineering. So having spent the time investing in technology companies through the fund, I became quite interested in climate change and global warming. And so I wanted to learn a bit more about renewable and sustainable energy. So I did a master's, at the ripe old age of 50. I go to the movies with my wife and say, one adult and one student. So it was pretty cool.
Perfect. That fit in well. So you've got, obviously it's across the board almost, right? From corporate, which is, the likes of McKinsey and EY, then startups, then the VC space, then also government. Which one, and I think it'll be hard to say one, but which one have you probably enjoyed the most out of?
Yeah, look, I keep saying to people, I mean, I've been very, very fortunate in my career. Had a massive breadth of opportunity. All of the roles I've had, probably since starting consulting were really interesting. Even before that, I had a stint at IBM, and IBM at the time was a fantastic employer. So I can't really select one, but I do enjoy, the common thread is I enjoy working with smart, entrepreneurial, kind of energetic younger people. And I think all of the roles I've had have enabled me to work with smart, energetic, and particularly sort of young, ambitious people. And I think that's the key thread for me.
Right. And now is it more, there's a lot of talk about the gig economy where the younger guys are doing different things. So is it for you with someone with significant amount of experience, is it almost like the portfolio strategy? We have got a portfolio of careers and you're picking and choosing different things.
Yeah, I think so. I mean, I want to stay very attached to the startup entrepreneurial scene. I'm involved actively in a number of startups that, are more than just advisory. So, trying to help create new businesses and new knowledge. But I do think where I'm at in my career, it is a portfolio. So increasingly, I'm moving towards advisory and board roles on a range of companies rather than focusing all my attention in one or two. And that it's, I say to people, I've made more mistakes than most people I know, so someone else may as well benefit. If I can share that around, I think that's an advantage too.
True. And talking about sharing maybe some of the learnings and insights. So obviously, you were one of the almost pioneers in the VC space in Australia because forming TVP in 1994, so almost 26 years ago.
Yeah.
And it was a fairly large fund, about $240 million. How have you seen that space, the VC space, evolve over the years? And I know COVID, we'll get into COVID in a second as well, but just until
Yeah.
that point as well.
So in Australia, it's evolved quite dramatically. And what tends to happen is, people set up fairly small funds and they invest relatively small amounts of money into a large number of companies, and then they raise bigger funds. And as a consequence of raising bigger funds, they can't invest small amounts of money because the economics don't work. So you found a lot of the funds that are out there today, which are now managing several hundreds of millions of dollars, are no longer investing in those early sort of seed and pre-series A rounds. I mean, they often say they are, but in reality, most of the money and most of the time goes into more mature companies. So uh, on the one hand, it's fantastic. We've got a significant multiple of the amount of money that was available 25 years ago in Australia, which is great because companies still need a reasonable amount of cash to break through. But what's unfortunate is the professional investors are not really actively investing at the very early stage. Now, on the other hand, when I was investing out of the fund, very few individuals were choosing to invest in venture type companies. At the time, interest rates are high and the stock market returns are really good. And the question was, could I get an incremental return investing in a small startup? Whereas now, particularly with the amount of superannuation that individuals have, anybody that's got a couple of $1 million in super could diversify their portfolio and put, some money into startups and private equity and venture type deals. So I think that's changed. And I think the third thing that has changed is, when I was investing in a technology-based business, it would require several millions of dollars just to build the platform. And that was just the beginning. Once you built the platform, you still had to market it and sell it and build the organization. So to fund a decent company back then really required, an initial commitment of, several millions of dollars. It was very hard to build it based on, $1 million check. So you needed to commit $5-10 million. Today, you can get a lot of proof for less than $1 million. So you can build a platform, you can test the market, you can assemble a team. So I think that's changed as well. So those would be probably the three key things in the last 25 years.
And the fact that the cost of doing business of building some of these platforms have come down, is that why there are more number of startups involved?
Absolutely. So that's been one of the things that's allowed startup and entrepreneurial businesses to explode, because in the old days, you'd have to get on a plane and fly to California and hire an expensive biz dev or salesperson, build a team there, and that was a really risky, time-consuming endeavor. But even if you had a leading edge tech, by the time you migrated the company to the US or Europe or wherever your hub was going to be, you've lost a year. And meanwhile, there would have been an international competitor that would kind of eat your lunch. Whereas now, distribution globally from Sydney or any well-connected part of the globe is possible with online businesses. And I think that's a really fundamental indicator for success, is how scalable you can become without necessarily replicating your infrastructure in lots of different places. And I think that's a really interesting question to ask as an entrepreneur, is can I build a scalable business without having to invest in multiple teams, multiple platforms? Can I just scale from where I am? Doesn't mean you have to be lazy, because it's still, where you can, getting face to face is still quite often valuable, and particularly as you move towards, significant scale and partnerships. But you can certainly prove a lot. You can validate a lot without having to step foot out of your home city.
Yeah, and I think it's also increased the willingness of fairly large organizations to partner with maybe a startup, which even 10 years ago would have been have to be of a certain size before we interact. I think they have seen that and they want to partner up with really small and early stage companies.
Yeah, and again, I think unfortunately, you look at Australia, which is quite there's a bit of a paucity of large global tech companies. And on the other hand, you know, you have US centered or European centered or Asian centered tech companies who realize that they don't necessarily hold all the marbles, you know, when it comes to technology skills or market traction. And I think those are the three key drivers. And those are available in, you know, in Bangalore, in Melbourne, in Sydney, in you know, Shenzhen, in Brussels, you name it. So I think that's the key, you know, the key takeout that, you know, if you've got unique technology, you've got unique capability, or you've been able to demonstrate your product can actually get traction in a similar market, you're going to be interesting to a partner.
Mm, certainly. And also,
If I could interject, I mean, I know I'm going a little off script, but technology has been a huge enabler in making, entrepreneurship rise everywhere. So post COVID, before COVID, we saw a lot of entrepreneurs, a lot of products, a lot of innovation happening. Post COVID, do you think there is a certain decline in entrepreneurship, or especially when it comes to investment as well?
I don't look, I think it's very hard to project what's going to happen post COVID because we don't even know what post COVID means, frankly. I mean, you know, if I had my glass half full hat, you know, once we have a vaccine, I think the economy is going to grow very, very dramatically. But there'll be parts of the economy that are sort of tethered for another 5 years. And, you know, so when we say post COVID, what's going to happen? Fortunately, I think for the startup community, we're in a very low interest rate environment, which means that people are always going to be looking for super returns. And it's been demonstrated you get those returns through entrepreneurship and entrepreneurial endeavor. So I don't think money is going to be lost to the sector. I mean, clearly, it's not going to be the same, but I think the investment's still going to be there. I don't think that the desire to create businesses is going to disappear. If anything, people have had to create their own jobs more and more over the last, you know, decade or so. And I think if anything is going to allow economies to grow out of the debt that they're now taking on board, it's increases in productivity. And those increases in productivity are going to come from innovation and technology. So, I mean, I think there's a lot of drivers that say there's going to be enough feedstock of entrepreneurial companies and individuals. There's going to be need for them. And I think there will be enough money. How that manifests is harder to say. You know, are people going to try to take a much safer path but much lower return, or are they going to basically invest in growth? And the other thing is investing in growth. You know, some governments are investing really heavily into technology businesses. I think France in particular had a very large initiative to support innovative tech businesses through this COVID period. It'd be interesting to see what the Australian government does here too.
yeah, and I think there are governments around APAC as well who are almost incentivizing these businesses to adopt the digital route because they've seen that this is a big driver.
It's massive.
Mm.
And again, look, thinking about your business, and we've discussed this before, the retail sector, the traditional retail sector in particular, was undergoing massive change well before COVID, whether it was the threat of online, you know, retail such as, you know, the Amazons of the world or the small boutiques with specialized service, whether it was based on price competition or just the ability to get products that no one's ever discovered before, like Etsy, into a market. That retail sector was being disrupted, and COVID has accelerated that disruption, as we know, pretty dramatically. So the shopping experience is really very different to what it was just 6 months ago. And that'll be an interesting one to project. And digital, I think, is going to have a huge role to play in helping retailers reform.
Yeah, and talking about retail and e-commerce kind of thing, like if you look at retail, e-commerce was anyways 10% or less than 10%. So there's still significant room for growth because now you've got customers and users who had previously just not gone down the digital route are now adopting this.
Yeah,
So post-COVID, it'll be likely that they continue that way and they don't go back to, okay, now the shops are open, I'm going to go back in there. So the customers are going to start moving digital, which is where
yeah, I
retailers.
think that's right. And as I said, I think you're engaging a new set of customers who probably would have taken another 5 years to go online. Um, it's very streamlined and easy now. So just the online experience is much more fulfilling than it was in Australia 5 years ago. And frankly, the logistics work so much better in Australia than they would have just a couple of years ago. Getting your product delivered in a timely way at low cost was something we only have experienced in the last 3 or 4 years in Australia. So, I mean, I think certainly our market is going to make that pretty rapid transition to digital.
Absolutely. And talking about COVID and the impact for someone who's been an investor, a startup for a number of years since '94 almost, so you would have gone through the Asian crisis, the dot-com crisis, 9/11, GFC, and so how is this
Yeah.
one different, or what are the commonality that goes through this that you've
So this
seen?
is
Or
clearly more severe than any of those, and it's more protracted at this stage. I mean, up until a couple of months ago, I would have said it's most like 9/11 rather than like the GFC. I think the difference, though, for the rest of the world, I think Australia did well in the GFC. I think governments have actually responded with less ideology and more practicality to this problem. In the GFC, that we were fortunate in Australia because the government at the time actually did stimulate the economy and really rescued a lot of the, rescued us from a lot of unemployment and, kind of structural losses, in social welfare, etc. I think globally people have recognised that you have to stimulate your way out of this, and they have been doing it. So again, it's a question of what is post-COVID going to look like, because my sense is, being an optimist, we will have a vaccine. It will take probably 12 months to be pretty widely disseminated across the population. But when it does, I think it'll have a massive boost to markets in general. And clearly the stock market's sort of factoring that in, but, all sorts of markets. So, again, consumers will go back. They'll go back in droves to travel when they can. They'll go back in droves to retail and to services. So I'm not terribly negative. I'm concerned about the length of time that this is going to take, and obviously there's a social cost in the process. But I actually think we'll recover pretty quickly once we get some vision to what the end looked like.
yeah, fair enough. And also the like raising funds for startups at this stage, and I know we've had this conversation previously as well. Uh, One thing that you've shared with me, which made a lot of sense, is almost running it almost like a campaign, like a political campaign, where or for anything. Otherwise, you can get sucked into
Yeah.
a number of different things. So just maybe if you can just share your thoughts on that.
So capital raising in general, I think you should treat as, I mean, if you're a CEO, an entrepreneur, a management team, you have to treat capital raising as part of the business, not a distraction from the business. So it's always got to be on your mind, because for you to thrive and to succeed, you have to survive, and to survive, you have to have enough capital. So one thing is, a lot of people say, I don't have time to do the capital raising, I'm too busy running the business. And I think that's the wrong approach. I think a big part of the role is raising capital and making sure that you're solvent and able to survive. I think the other thing is, as you well know, when you're trying to raise money and you present a deal or an opportunity to an investor, there's 100 reasons that they could say no. And the longer they think about it, there's probably more reasons not to do the deal. So part of, I think, the art of getting an investment done is to have all your collateral really worked out, have great external validation for what you're doing, demonstrate traction over the period that you're engaging with an investor, and try to move the investor or investors along at the same time rather than stringing them out over a long period of time. So thinking about it as, this is my objective, this is my armament, my collateral, here are my targets. I'm going to work closely to get the first 10 committed or not. And frankly, getting a no is almost as good, not quite as good, but almost as good as a yes, because then you can move on and not waste time. And sort of working through those target investors till you get to that core that are interested and can get into due diligence. I think that's the trick. I think it's really hard stringing these things out. So, yeah, my view is you run a capital raising like a project, like any other project, and you try to set yourself some timelines, some milestones as to how many people you need to talk to, knowing that some will fall off. And then when you get a point where they're interested, work really hard to close the deal.
Right. And I think Vidushi and I were just chatting before the call about the productivity. And I think Vidushi, you had some things.
So, I mean, we've seen now that we're all completely dispersed, and with 3 billion people inside their homes.
Yep.
How do you get them? How do entrepreneurs manage them? And what is it that entrepreneurs need to keep in mind when they're especially handling productivity of teams that are working offline?
So I've had this conversation with 3 or 4 of the companies I've been involved in, and I think I'm interested in your views, but many of them have said, the first couple of months of COVID, they felt productivity was pretty flat, and it actually hadn't declined, maybe gone up. And then the last month or so, they felt it started declining. And I do wonder whether, people are falling into a pattern that it's one of two things. Either people are falling into a pattern that says, I can get this level of output out and not be accountable for it. That's one option. The other option is team leaders and leaders in general aren't able to communicate the urgency, the requirements,
Yes.
the need to their staff when they're remote. And I think it's something we're going to have to face, because I as much as I would like to think that the way we're operating now is able to work in the long term, I'm not convinced that working wholly remotely is going to be a very productive way to operate. I know that quite often just sharing comments in a very informal way can lead to massive productivity improvements in a development team, for example. If you don't have that easy access, it's kind of hard. And so then you say, well, do you want to have your control center with 50 screens looking at people typing away? Probably not. But there could be some other automation tools that could be really interesting to help maintain productivity and communications.
Yeah.
And I think I know one particular company has a very neat productivity tool for, for remote and people who used to work in open environments. And I'm sure there are other people working to solve this problem without too much of a big brother approach. And I think we have to adapt to the fact that we aren't going to be working the way we used to work. I think co-working space business models are really challenged now. Most companies are saying they don't need to lease as much office space as they used to lease. And I think there's going to be a different way of building in people's lifestyles with their work environment. And maybe property developers could get smart about how they develop the next generation of commercial real estate, for example.
I'd like to move this to Abhi, and I'd like Abhi to chime in on the same, since you run a company that has a lot of remote workers. So what has your experience been like in the same?
Yeah, like for us, it was for Okkular, like we were, it was remote right from day one. It was remote because we obviously could not, we wanted to get wherever people we can afford and get the talent, went and got them. So for us, the move to having working from home was not such a big issue because we had teams across the world anyways. But what we did have is a core team which was based in Australia, which would meet quite often and to collaborate and discuss. And because for us as a startup, it's not like we have already got everything worked out and we are executing on a product and a plan, and the execution is just business development. It was this constant collaboration. So for that, you're right. I think, Alan, the initial part was okay. We were able to do it online, but then at some stage, we really wanted to get into one room and just
Yeah.
whiteboard things and get that across. So
So is this like a trend that we're going to see a lot more often? Is that concentrated core team members in the same country, and then the rest of the workforce spread out across the globe?
I think there's probably some academic research on the optimum size of teams that work in different environments. And my sense is you can get 5 or half a dozen people together, working closely, collaborating, whether physically together or online. And I don't think you lose that much. But I think once you start distributing those teams with different team leaders, just the connections and the communications across teams and within up and down within teams becomes much harder. And then you got the other level of complexity, which is hiring, interviewing, inducting teams, reviewing performance in a formal way. So all the normal management things become somewhat more complex. And I guess the final issue is one about human nature, which is, do people actually value social interaction outside of their family and homes? And if you're not providing that, is there another way that they're going to fulfill that need by going down the pub and having a drink versus, or taking 2 hours for lunch so they can, do whatever with their friends. So, it's all of these things that we're learning in this new environment. And again, it comes back to what you asked before, which is what's it going to look like on the other side of this?
the new normal is changing on a
Yeah,
on a daily basis almost.
really is.
So I think one very important thing, and that I believe from this, is that communication is key at this point. Whether it is communication internally or externally, communication to your consumers, I think that's communicating to investors. I think that's the world we live in now. We hyper communicate, I guess.
Absolutely. And it's interesting, again, like the ability to schedule a face-to-face Zoom meeting as opposed to maybe a telephone call is so much easier now. Everybody, you don't have to explain which buttons to press and how to connect and whether it's Teams or Zoom or Google, it almost doesn't matter. People know how to use the tools. Again, it's accelerated your ability to market and introduce yourself and communicate. Probably maybe the material is a little bit shallower than you would if you were doing it face to face, but the frequency can be way more useful, right? So you get more frequent but shallower communications electronically. You can still write emails, you can still post information on LinkedIn. What you can't do is have a coffee and build a really tight personal relationship.
Yeah, I think
I guess yes.
people are opening up to the concept of having the a conversation across the world and not having to, wait till they get there. And I think the travel industry will be hugely impacted after this because there'll be people who have gone through this period and say, well, we managed it during this time. So it'll never replace face to face and building that rapport, obviously, but
I mean, it's interesting because if I think of you talk about investing, for example, I would struggle to get to conceive that I could get to a point where I would invest in a company without having had personal face-to-face interactions with people. I think it's really challenging to do that in the sort of businesses you're in. I mean, clearly, you buy shares on the stock market, you don't even get close to the CEO. But when you're talking about, small businesses which are very dependent on individuals, very hard to make an investment decision without having met those individuals, understanding what drives them. And that's very difficult to do, even electronically.
true.
Yeah.
Perfect. I think that's pretty much. I think we've gone on mute there. I think that's pretty much what we wanted to cover, and I think there have been some amazing insights that you shared, Alan. I think it'll be really good to be able to share these to a number of different types of individuals. From startups to businesses. I think it's been amazing to get those thoughts over.
Well, hopefully. I mean, it's certainly an interesting journey, isn't it, Avi?
Yeah, exactly. No, absolutely. I think it's. I was telling a couple of friends as well that you get involved with startup initially. There is this bit of a romantic idea of I want to do it on my own, but then you go through the pain, and I think if you can stick through that, that's when okay, you really want to
Yeah, I think that's right.
get through it because there's always this notion of worked in a garage and suddenly you've made it.
Yeah, exactly. 20 years later, you've made it.
Yeah, exactly. 20 years later and slash overnight. Yeah. So I think I can
All right.
stop the
All
recording
right. So I
now.
guess this brings us to the end of our podcast. I thank everybody who chimed in, to listen to us, and hope this conversation has contributed towards, opening your worldview about what the world post-COVID will look like. Thank you so much for joining us today, Alan, and
Thank
thank
you.
you. It's been a lovely conversation. Thank you.